Hey guys, so the other day I did a video talking about the reasons to buy bonds instead of stock. Today we're going to switch it around and I'm going to share with you 3 times when it is better for you to buy stocks instead of bonds. So the first reason to invest in stock instead of bonds is if you want larger return on investment. If you say go hard or go home, the stock market is for you. This year, Kodak stock rose from about $4 at the beginning of the year to about $32 in July. So if you had bought at the beginning of the year, you would have earned 800% on your investment. You more than likely would not earn that in the bond market. So for higher return, the stock market is the place to go. The second reason to buy stocks instead of bonds is if you have time on your hands. So the stock market is pretty volatile, right? That same Kodak stock that I just mentioned went from $4 in January to about $32 at the end of July, and now it is around $8.30 something cents. So that just goes to show you how volatile stock prices can be. However, over time, over a longer period of time, that kind of evens out, and the likelihood of you making a positive return is usually greater the longer the time that you have to go. So if you don't need your investment returns like right away within the next year, then the stock market is a great option for you to earn long-term higher returns on your investments. The third reason to buy stocks instead of bond is when you identify a company or an industry that has great potential. And when I say great potential, I mean that it has some kind of advantage in terms of its process or technology that will allow it to make higher profits in this near term. So let us bring it back to Kodak. Kodak stock price rose so much because Kodak decided that they would be changing their business model from just film to start making COVID testing kits, and that is something that's going to be in demand in a lot in the very near future, and probably something that will stick with us for a while. So that is why a person saw that potential and jumped in, and that is what caused the stock price to go up. Assessing these things definitely takes a lot more than just a hunch. You should always do your research, analyze the company, the advantages of the company, and its ability to generate that profit that you predict. In the case of Kodak, right now the stock price came down because they are having some difficulties regarding the funding, and so that is why you see the stock price falling. So that's just saying that you need to also look at the trends and also analyze the factors behind the trends. But as I said, if you see profit potential, that's the time to jump in. The good thing, as usual guys, is that you don't have to choose. Any portfolio is usually made up of a mix of different asset types, so it's just up to you to choose the proportion that's right for you.